Nigeria's inflation rate right now is 15.10%, according to the National Bureau of Statistics as of January 2026. But your typical bank savings account only pays about 4 to 6% per year. What does that mean? It means your money is quietly losing between 9 to 11% of its real value every single year. Not because you spent it, not because you made a bad investment, simply because you saved it in the wrong place. Let me make this very real. Imagine you have 1 million naira sitting in a savings account earning 5% interest. After 1 year, your bank statement shows 1,050,000 naira. Looks good on paper, but when you adjust for 15% inflation, that money can only buy what 912,000 naira could buy 1 year ago. So in reality, you didn't make money. You quietly lost 88,000 naira in purchasing power. And here's the scary part. This is not a one-time loss. It compounds. It happens every single year. Your bank balance slowly increases with small interest, but the real value of your money keeps shrinking because prices are rising faster than your savings. This is called the inflation trap. And right now, millions of Nigerians are stuck in this trap, including people who consider themselves financially responsible. So, what do you actually do? There's a simple rule in finance. Your money must earn more than inflation. That's the bare minimum. If inflation is 15% and your money earns 5%, you are moving backwards. To protect your wealth, your returns must be at least equal to inflation. And anything above inflation is where real wealth begins to grow. The good news? There are several financial instruments in Nigeria right now that beat inflation. Number 1, money market funds. 18 to 22%. This is probably the easiest place to start. Money market funds pool your money with other investors and put it into short-term, low-risk instruments like treasury bills and commercial papers. You earn 18 to 22% annually, and your money is still liquid, meaning you can withdraw it when you need it. Platforms like Cowrywise, Stash, and ARM Money Market Fund let you start with as little as 1,000 to 5,000 naira. No broker, no complicated process. Just download the app, fund your account, and your money starts working immediately. Number 2, commercial papers. Commercial papers is between 17 and 23%. Commercial papers are short-term debt instruments issued by large reputable companies. Think Dangote, MTN, or big manufacturing firms when they need to raise money quickly. In exchange, they pay you interest rates between 17 and 23%, typically over a period of 30 to 270 days. You can access commercial papers through licensed stockbrokers or platforms like Meristem and Cardinal Stone. Minimum investment is 100,000 naira and above. Number 3, FGN bonds. FGN bonds is about 15 to 16% and they are tax-free. FGN bonds are issued directly by the federal government of Nigeria. When you buy an FGN bond, you are literally lending money to the Nigerian government, and they pay you back with interest. The returns sit at roughly 15 to 16% per year. And here's a detail most people overlook. The interest you earn is completely tax-free. That means every naira of return stays in your pocket. You can buy FGN bonds through the CBN, the DMO website, or through your stockbroker. Minimum investment is as low as 10,000 naira, making it accessible to almost anyone. High-yield savings vaults, sometimes 18 to 25%. Several Nigerian fintech platforms now offer what they call savings vaults or locked savings products, and the rates are impressive. We're talking 18 to 25% per year, sometimes higher during promotional periods. Platforms like PiggyVest and Cowrywise offer these products. The key difference from your regular savings account? These vaults often require you to lock your money for a fixed period of 30, 60, 90 days or longer. That's the trade-off for the higher rate. But if you have money you know you won't need immediately, emergency fund aside, this is one of the simplest ways to beat inflation without any complexity. You can start with as little as 1,000 naira. The bottom line? You have options, real ones. The question is no longer where do I find better returns? The question is which one fits my situation And when do I start? Because every day your money sits in a low-interest savings account, inflation is already at work. Your regular savings account is useful for immediate transactions and emergencies, but using it as your main place to grow wealth, that might be the most expensive financial mistake you're not even aware you're making. Because while you think you're saving, inflation is quietly taking money from you every single day. Nobody told you this. Your bank certainly won't. They profit from you not knowing. If you want to know exactly how to move your money into instruments like these, I'll be breaking it all down in the next sets of videos. Subscribe so you don't miss any of them. Drop a comment below this video if this finally clicked for you. It helps more people find quality content like this. Let's quickly recap what we covered today. Inflation in Nigeria is 15.10%. Your savings account pays only 4 to 6%. Money market funds give you 18 to 22% with full liquidity. Commercial papers offer 17 to 23% over 30 to 270 days through licensed stockbrokers. FGN bonds deliver 15 to 16% tax-free, backed by the government. And high-yield savings vaults give you 18 to 25% with a lock-up period. The key mindset shift is to stop thinking about saving and start thinking about investing. Every naira you have should be working hard for you. Don't let your money sit idle when there are real options available. The first step doesn't have to be big. Start with 1,000 naira on Cowrywise or PiggyVest today, or explore FGN bonds at dmo.gov.ng. The information was always out there. Now you have it. Now go make your money work for you. Subscribe for more. See you in the next one.